Hi guys, what's up? My name is Emma. Welcome back to our channel. If you are new here, welcome. Thank you so much for coming. Please make sure you hit the subscribe button, the bell, the thumbs up, all the buttons you see, just push them, okay? Now let's get into this video. Today I'm gonna be talking about capital gains taxes. Now, huge disclaimer here, I am not an accountant, I am not a CPA. I will never be an accountant and I will never be a CPA. I know that for sure. So with that being said, take this with a grain of salt, do your own research, talk to your accountant, reach out to a CPA if you need someone. Let us know in the comments and we can definitely find someone to help you. So let's get into this. What are capital gains? Capital gains are a tax on assets and profits made when you sell your real estate. So what does that mean? Say you have owned your home for a year and you decide you want to move into a new home and the market has gone up significantly and you can make a lot of money. Say you can make $100,000 on the sale of your home. You're not really going to make $100,000 because you've owned that home only for a year. So that $100,000 that you made as a profit, you're going to have to pay the IRS up to 25% tax on those profits. That's $25,000. That's a lot of money. So one way that you can avoid paying this high tax or paying some of this high tax is by living in your home for 2 of the last 5 years. So if you have owned your home for 2 years and you've lived there for both of those 2 years, if you are a single person, you can make up to $250,000 untaxed. Now that's profit. If you're married, you can make up to $500,000 untaxed money. Now the key piece here is that you have to have lived in your home for 2 of the last 5 years. So you can live there in 2020, 2021, both full years, and rent it out for the next 3 years. And in 2025, you can sell that home and you can still get that tax break of either the $250,000 if you're single or $500,000 if you're married. So this is a really great thing to look at. I've had people reach out to me, they want to sell their home and they've owned it for 18 months. And I tell them about this and they're like, whoa, we're gonna stay in our house for another 6 months or whatever it is to avoid paying that tax because it's a lot of money and it eats up a lot of your profits. So this is really good information to look into if you're thinking about selling your property or you're making plans to buy a property and you know that you're gonna wanna upgrade later. Make sure you live there for at least 2 years, please. You can save so much money. Like I said, I am not a CPA, I am not a tax professional. Please talk to a tax professional about this. This is just some good information for you to know so you're not gonna sell your house thinking you're making $200,000, but really you're giving the government 25% of that. Never feels good and can really mess up your plans. So please talk to an accountant about this before you sell your house, especially if you have not lived there for 2 years. It might be better for you to just stick it out there for a little bit longer so you can make that bigger profit. I hope you liked this video. If you have any questions or you'd like to learn more about real estate in Arizona, please leave us a comment below. You can also reach out to me at 480-334-7095. And you can access our free buyer and seller workshops at gophoenixrealestate.com/workshops. We'll see you there. Thanks, guys.